Hello and welcome back to the Bizcast. Today we have a very interesting episode where we speak to Ollie Roper, a manager at Shaw & Co. We learn about his journey into corporate finance, insights into owner-managed and lower-middle-market M&A, as well as more information about Shaw & Co.'s exclusive Summer Internship program. Later in the episode, we also get the chance to speak to Salvy Ganpatsingh, a 2025 summer intern, where we learn how he secured the role, as well as what the summer internship looked like. So thank you so much for coming on today, Ollie. It's great to have you here. I think it'd be great to kick things off with just a little bit of a background about yourself.
Yeah, so I've probably been 8 years in professional services, sort of financial services. I don't quite know. It's quite a broad market, but I trained as an auditor for 4 years. Everyone says for my sins, but hopefully I'll mention later. It's not always as bad as everyone says.
Yeah.
But I spent 4 years training with a firm called Smith and Williamson, who have gone a bit full circle. They've went Smith and Williamson to Evelyn Partners, and now they're back to S&W. But I did my ACA there, qualified, and then decided to move on to pastures what I would call slightly more value add. So I've then been at Shaw & Co for just over 4 years now, joined as an exec, worked my way up to manager, and very much enjoying it.
Cool, fantastic. And I'd be very curious to hear about what first attracted you to completing or becoming a chartered accountant at S&W.
Well, I think the best way for me to describe that is sort of if I think back to my journey when I left school. So when I left school, I knew I wanted to be in sort of the business world, but I didn't know where.
Yeah.
And I did a few languages at A level, so I got backing in French, Spanish, Italian.
Oh wow.
And the best way I thought to then get a general view of the business world, while also sort of cutting my teeth, say, was to do an international business degree. And very much the same when I was going through that degree, I found that basically the modules I enjoyed the most were the finance modules, not just the prime accounting ones, but also sort of the ones that are around sort of valuations and M&A and all of that. But again, I didn't yet know where in the finance world I wanted to be, and in reality, the best thing to do then is to go join an audit firm, just because you get a breadth of understanding of different businesses, you get to understand different sectors, and all while studying for your ACA, which is a really, really valuable qualification. So I stumbled into the ACA just because I knew it was sort of the area of work I wanted to go into, but I didn't know the specifics. And then just going through that ACA, through that audit journey, working on multiple different clients in multiple different industries during those 4 years, it then led me to it then pointed me towards the corporate finance route as an industry that I thought I'd be interested in.
Yeah. Just in terms of the transition from audit to corporate finance, how did you go about kind of building the necessary skill set in order to facilitate that transition?
Well, a lot of the skill set you need for corporate finance you already have in audit, because a lot of it, especially on the sort of business analysis side, you do that a lot in audit. It's just more backward looking than forward looking. But then there's a lot of different skills in corporate finance that I'd never even thought about, such as like the creative writing and like taking large amounts of information. And when I say large amounts of information, I mean more sort of qualitative rather than quantitative, and really distilling the value drivers down of the business. And the way I basically found out and learnt those skills was just going out and talking to people. So Smith and Williamson's great because it's got a corporate finance arm to it. I knew a couple of people in there, so I spoke to them. There wasn't any jobs going, but at least I spoke to them and I was able to get some ideas, so that then you can then bring them into the interviews that you're going for, as you know what people are going to ask you. And also it's just so important to know what you're getting yourself in for. As everyone knows, corporate finance is a lumpy job. Sometimes you're working pretty hard, and if it's not a job that you enjoy, you can't motivate yourself to do those long hours.
Yeah. And now just pivoting to Shaw & Co specifically, so obviously I assume you were looking at a range of different boutiques. What drew you to them in particular?
Well, I looked at both boutiques and the big guys as well. So I did a whole market view. And actually, when I was first looking at leaving audit, I was first looking at due diligence or transaction services. Different firms call it different things, but essentially it's almost the audit during a transaction. So when you're selling a business, you'll negotiate the offer with the buyer, but then there'll be a due diligence team that will come in and basically review the company to basically make sure things are what we say they are.
Yeah.
So I originally started looking at that because the bit I enjoyed of audit was sort of the analytical review of understanding the numbers and why they are those numbers. So to me, the most obvious step was, okay, let's look at due diligence. I did a full sort of map around that, and I hadn't considered corporate finance at all until a recruiter just called me out of the blue and said, "Have you heard of Shaw & Co? Have you heard of corporate finance?" And I was like, "No, okay, I'll have a look at this." And I went for my first interview with them, and actually I was like, okay, I hadn't really considered a small company before, but it had such a nice sort of entrepreneurial feel, and you could see everyone sort of had a really nice bit of autonomy. So it just seemed like a really good place to come and learn, to bounce ideas off people, that it had a really flat organisation structure. So it was really somewhere where if you wanted sort of a bit of freedom to be able to sort of learn and develop in your own way, it was the place to go, free from any sort of corporate constraints.
So in the 4 years you've been at Shaw & Co, is there a particular transaction that stands out to you as being memorable?
Yes.
There is.
Very much so. And memorable for the right reasons.
Okay.
I can obviously say there's a few which do live in my memory, but not necessarily the right things, apart from when you signed on the dotted line. It's the best transaction that I love talking about is we sold a business called Canopy Simulations to Michelin. And what was brilliant about Canopy was, so that there were three guys that were out of McLaren Formula One, and they developed a bit of software that ran motorsport simulations. And so it was called co-location, and basically it meant that they could, instead of inputting every bit of variable onto a Formula One car, like tyre wear, fuel consumption, track conditions, and just like running multiple different simulations one after the other to work out the setup of the car, they could just input all the variables they wanted, and it would spit out the optimal. So it saved goodness knows how many man hours. But what I loved about that transaction was it was learning about the F1 market. Loads of our buyers list were Formula One, but then also because this software had so many different uses, we had such a wide field of buyers, and you could almost write an investment thesis for any one of them. And it wasn't just buyers in the UK. I think I worked this out actually a couple of days ago, that on the buyers we had about 11 buyers from 11 different countries.
Wow.
And for someone who's done an international business degree, suddenly to see that sort of real international spread, and it was just fascinating to learn about different cultures. The client was great. It was a really friendly transaction, and it was one where you came away and both sides were still friends as well. So I learned a lot about that.
Yeah, great. Yeah, that sounds like a really interesting transaction. I think firstly because of the sector it's in, but then also, as you say, having that much buyer interest, that probably is quite rare.
Depends on the asset.
Okay.
I've had transactions where there is just one buyer. And you've done a whole market sweep and one buyer. And it's the buyer you expect, but there's only one interest. And then the real skill there is sort of trying to create an allure of competitive tension without lying.
Yes.
To try to keep them interested. But then every now and again you get buyers where you're having to swat everyone away.
Shaw & Co. The company was founded early 2010s.
2011. Yep.
2011. Yeah, it was founded 2011, and has had quite a successful growth story. Could you maybe talk me through how the company's looking to expand? Because obviously recently the Manchester office did open, and then a director was appointed there. But what are the plans?
I'd say the main goal of the company is we want to be the number one advisor for owner-managed businesses in sort of the regions. When I say the regions, sort of London's saturated with advisors now, but there's not many businesses out there that are really focusing their energy down on the owner managers in each of the regions. So we're obviously, the mothership's Bristol, Manchester's the next hub we're looking to grow, and we're up to 3, potentially hopefully 4 soon over there. So it's really expanding, and we've just done our first deal up there as well.
Yes.
Hoping to close another in the next week or so up there.
Right.
So it really is that sort of regional focus, and not necessarily trying to go too high on the deal value. Because when you start going too high on the deal value, you start to lose focus of the owner managers. When you start getting towards sort of the 60-70 millions, the likelihood is there's some institutional investor in there, and it's not a prime owner managed business, which is where we can really make a difference. And again, you see this with advisors a lot. The more they grow, the higher they go up the transaction pyramid. So it sort of leads behind that owner manager, and that's where we really want to come and help.
So what sort of competitors are you guys looking to essentially surpass?
It's a tough question. That we come across all types of competitors, because really when you're in that owner managed space, you obviously come across your FRPs, your Momentums, but then you have some of the big boys as well. And it's partly because the deal flow in the market's been quite slow. So you've got some of the big four, but then also some of the big London investment banks we've started competing with, and actually we're beating some of them.
What do you think that is? Just that SME focus?
I think so, but also I think what I feel like some of the owner managers that we speak to really get the sense of is that we're set up to service them. So wherein you're sort of in a bigger organisation that are potentially doing bigger deals, and this becomes quite a small transaction for them, they almost feel like one of the numbers. Yeah. Whereas with us, you always know you're going to get that focus. Yeah. And it sounds really cheesy, but we know how to speak their language. Right? We deal with SMEs day in, day out. Yeah. We know the pain points they're having. And part of that is because Jim's grown the business as an entrepreneur, so he is an owner manager. So he's sort of instilled that knowledge in us so that we can speak the same language.
Yeah, and that actually sort of leads me on to the next area that I'd like to ask a little bit about. In terms of how corporate finance for SMEs differs to the transactions that larger investment banks work on, so obviously you said it's important to speak the same language, but would you say there's anything else that's quite characteristic? The
one thing I think is the biggest difference, and again, this is more me learning through feel and actually learning by talking to people in the market, and actually mostly students in this. The main difference is a bit of a shift away from looking at modelling and the financial modelling to more really sort of the qualitative value add parts of a business. Yeah. So whereas in the larger transactions it's all about your DCS, it's all about your CAPMs, you basically got to be an Excel genius to be able to help do those deals. In this area of the market, a lot more focus is put onto what we call the information memorandum. So it's essentially a bit like a sales brochure on the business, and you're really looking to distill all the good aspects of a business and why someone should buy it into like 60 pages. And part of that is narrative, part of that is graphs, part of that is financials. But actually the financial modelling, you want to keep it as simple as possible. You want to try and avoid all these sort of complicated Excel formulae, because in reality, if you make it too complicated, a buyer ain't going to understand it. Yeah,
especially in the SME market, maybe they won't have as large M&A teams, for instance. So
it depends on the type of business you're looking for, because actually one of the things we like to specialise in, and actually we've had some real success, is what we've coined the David and Goliath deals. So if you look at some of our deal sheets, like we've sold to Groupon, we've sold to Unilever, to Michelin. Trying to think of some other good examples. We've just sold to Access. I've sold to Blackline, who are a 3.5 billion US company. And actually, where the real skill there is sort of helping the owner manager not be too afraid of these big boys, because they suddenly come in with their huge bench strengths of like magic circle lawyers, and we will come up against them and do well for our client. But I think the other thing to mention on top of the difference between the owner manager and more the higher scale is these deals tend to take longer. Okay. And there tends to be a lot more preparation before going into the market. If you think a classic entrepreneur, they are focused on growing their business in terms of sales and cash generation. Yeah. One thing that really gets left behind tends to be the finance team, because whilst it's not always correct, people do tend to have in their heads that finance it's a money hole. It's not revenue generating. Therefore, I don't want to focus too much time on this. And actually, whilst there's not always a problem, sometimes it's not set up to project the business in the best way. Be that from revenue recognition, from understanding your costs. So there's tends to be quite a bit more preparation before you actually get into the market. Because if we've uncovered a problem, it's much better we uncover a problem than a due diligence team. Because once a due diligence team smells blood, they don't stop.
Pulling out,
Exactly. Not just pulling out, but price chipping.
Yes,
that's
price
the main
chipping.
one.
Yeah. So in terms
and then you just lose the balance of power.
Yeah. So in terms of like time span of a deal for an SME versus
9 months is sort of an average. for an SME. It can go quicker.
You'd say larger companies might be like 6 months.
Yeah, potentially. Just because likelihood is they've already got a financial model.
Yeah.
They may have been through investment rounds. They've got a lot more material to put an IM together, and it is easier to sell larger businesses, just because there's a bit. It might sound weird in that you're writing a bigger check, but actually a larger business is a little less risky than a small business because they are more ingrained in the market.
Finally, in terms of the SME market, are there any trends that we've been seeing in terms of M&A activity in the last couple of years?
It's been quite challenging recently.
Yeah.
It was bumper coming out of COVID, then the tech stocks fell. There was a bit of uncertainty there, but then it picked back up. But in the last year or so, it's been quite quiet in the SME market, and that it's all about risk. There was a big peak coming into the budget last year for obvious reasons. Everyone was petrified of tax. There's not quite that urge this year because all the soundings are that tax might go up, but it's not going to be capital gains because that's the real driver for a wash of M&A activity. But what we have seen in the SME market is deal flow starting to come back, and I'm expecting next year to be quite busy in terms of the SME market because people are starting to ride out some of the waves. And the other thing is private equity needs to start investing again.
Yeah.
So a lot of PE firms have the funds.
Yes.
But there's not been what they deem the quality assets in the market. And actually, especially in the lower mid-market, has been really struggling to find businesses to invest in because there's not been that quality of asset through the whole market. You've started to see the big boys come down into the lower mid-market and just blowing them out of proportion because they need to deploy their funds as well. Yeah. So, yeah, I'm expecting a lot more private equity activity, which then drives the whole M&A market.
Yeah. And are there any sectors that are looking good at the moment?
I mean, tech's always hot. Yeah. Especially anything to do with AI.
So have you more mandates, more tech?
We've always done a lot of tech.
Yeah.
Always seen a lot of tech. Healthcare is always big. Anything that can sort of help firms with productivity.
Ollie, you've been running the internship for the last 4 years, and I know you are quite hands-on with it. What would you say you're looking for from applicants, both in the screening stage and then the assessment centre?
I'm really looking for someone that knows what they're getting into. So, as anybody who's come to any of the presentations I've done, they know I tend to be a bit sassy in terms of what I'm looking for in terms of application and what I really don't like to see.
Yeah.
So, I can't expect anybody to have any technical knowledge, and I don't expect anybody to have any technical knowledge. The whole point of why we run this internship for mostly first years is to really give that experience and help you on that first step. So we can't assume that you know anything about corporate finance. So what I really want to know is, firstly, what is your motivation? What's your end goal here? Do you know what we actually do? As you'd be surprised how many people don't know what we do. And actually, it is quite tough to figure out what we do. Corporate finance spans many different things.
Yes.
But I want to know what interests you specifically about Shaw & Co. And I don't mean just saying, oh, you deal with owner managers, that resonates with me. Why? And can you give me an example of any of our deals that we've done? Did you find something particularly interesting? And I'm not just saying, oh, I liked the Pucker Herbs deal you did because I've heard of the brand. Yeah. It could be that deal that interests you. Yes. But I need some evidence to show that you've actually looked at it, read it, understood, and thought, okay, that is interesting, because we get upwards of 40, 50 applications a year. We only take 2 people, and we only take 8 people into an assessment centre. So there really needs to be something to make you stand out. And this internship is all about personality. I mean, corporate finance, the big skill you can't learn by just revising and sitting at your desk is personality and interpersonal skills. So if you can really show us, I know it's hard to do that in a cover letter and a CV, but especially if you get through to the assessment centre, we're really looking for sort of the kind of skills that make you flourish in an office. Yeah.
So just to summarise, you're not going to be testing people on any kind of technical questions.
Oh, no.
No, it's more about kind of showing who you are as a person, performing well in the group task.
Yeah, and we do an interview as well as part of the assessment centre, but when I write the questions, there's nothing in there that says, what do you know about corporate finance? Do you know what a CAPM model is? Do you know what an information memorandum is? Do you know what the difference between working capital, net debt, enterprise value, all of those sort of concepts. I'm not going to ask any of that.
Thank you so much for coming on today, Salvy, and it'd be great just to hear a little bit about your background.
Oh yeah, well thank you for having me. I'm a second year accounting and finance student. I spent the summer interning at Shaw & Co, which was a really brilliant experience. I come from Brighton and I'm currently applying for investment banking internships.
Cool, fantastic. So now if we just move towards the Shaw & Co application process, how did you ensure you were thoroughly prepared both during the screening stage and then also ahead of the assessment centre?
Okay, yes, sure. So I'll start with the screening stage. I think the most important part was researching Shaw & Co.'s values, their deals, really understanding what they do as a company. You know, they're not a big corporate. They're a small group of guys who do brilliant things, and it's really understanding that the type of business their company operates in, the market that they provide for. The main piece of advice I would give for preparation for the assessment centre is to really work on your collaboration and your leadership skills. And when I say leadership, I don't just mean kind of you tell other people what to do. My most important aspect of how I view leadership is as someone who listens as well as can take control. So they're looking for that. You know, every moment of an assessment centre, they're looking for your behaviour as to what you're doing, and it's not always the loudest person who's going to be the most successful. So going into the assessment centre, my biggest piece of advice would be focusing on yourself as a person. You know, be prepared for the deals. That's a given, but they're looking for really motivated and well-rounded people.
Looking back on the process, is there anything you think you would have done differently or you wish you would have known before starting out?
Sure. I think that understanding that Shaw & Co is a very tight-knit culture, a smaller firm, and they're looking for personalities, you know. You're going to be shoulder to shoulder with these guys in their office for 6 weeks, and they want to be able to make sure that they'll get on with you and you'll get on with them. So really understanding that it's a small firm, but don't discount the fact that it's a small firm, because, you know, they're a brilliant firm.
Yeah, but definitely important to show your personality, really. Just going on to the internship specifically, could you run us through the typical day-to-day tasks that you'd be working on as an intern during those 6 weeks?
Sure. So it was very unstructured, which I really liked. So the fact that we were working on what they were working on, we'd be assigned kind of different tasks each day, and those ranged from things like valuations to market research. We'd even be pulled in on client meetings occasionally, opportunity to interact with private equity firms in the local area. So there was just loads going on, and they wanted us to be involved in everything. And it was just, it was brilliant because they made it really clear to us that we had access to everyone whenever we needed for any kind of advice. And lots of these guys are experts. You know, they've spent their careers working in places like Lazard and, you know, in the big boys. And so it's a really great opportunity to learn from people with such expertise.
I think, again, the fact that it is such a small team means that, well, firstly, everyone's going to be in the same office. There aren't like kind of, you know, different areas for partners and then directors. You're all together. So as you say, that kind of learning from seniors is really harnessed.
Exactly. I mean, just the fact that most days we'd be sat opposite the CEO, Jim, who was an extremely knowledgeable man.
Yes.
And he's always looking to help out. So it was brilliant.
Good stuff. Now then, just reflecting on the internship, what do you think you found most challenging about the opportunity?
I would definitely say the jargon of corporate finance. When you arrive in the office, it's like, even if you've prepared and you understand before, you know, all of the jargon hits you, and you're just surrounded by all this language which you really don't understand. It's a steep learning curve, and I think that's what I enjoyed most about it was, you know, you feel like a bit of an idiot in the meetings, but you ask questions, and even if you think you look like an idiot, you're not, and you're in a place where people want you to ask these kinds of questions. So I found that extremely valuable.
And I think especially, look, the opportunity to do an internship like this in first year, which isn't convertible, so if you ask a silly question, you're not really going to be discounted against. I think it's really valuable. As a first year looking to break into finance, what's one bit of advice you'd give yourself?
Absolutely. I mean, just keep trying. There's so many opportunities, and a big piece of advice that I know Zane, who's not here, would also give is to block out the noise and just work hard.
Yes.
And the opportunities will come. Throw yourself at everything that you can, because there's going to be tons of rejections, and every rejection teaches you a little bit more. I think just keep working, keep trying, don't stop.
Fantastic advice there. Having seen 4 years worth of internship cohorts, what do you think has made the most successful interns? What qualities on the actual internship?
Somebody who's willing to sort of throw themselves into everything.
Yeah.
Because again, this is a learning opportunity for you guys as much as it is sort of value add to us. So the people who've done well in the internship have been the ones that have just said yes.
Yeah.
So like if we say, oh, I've got this meeting with this banker, do you want to come? There's this networking event in the evening, do you fancy joining? People who say yes, they learn so much more.
Yeah.
And it's the network that they get from it is so much greater, because then you never know when you bump into these people in future applications, but also you grow your knowledge of different industries, because you won't just meet corporate financiers, you'll meet lawyers, you'll meet bankers, you'll meet accountants, you'll meet private equity investors, and it just gives you that sort of whole market view.
Yeah, that sounds like a great opportunity. Thank you very much for sharing about your experience within corporate finance and about Shore & Co specifically, and looking forward to the internship this summer.
Yeah.
Thank you very
Looking
much.
forward to meeting everyone.
Are you